Shoot. Sorry. If you're live right now, I must have hit a button to close it off. I'm not sure if I'm actually streaming at this point. Let me check. Okay, it says we are live. Different thumbnail, different live stream. Let me just copy this link super quick. Sorry about that. Live got dropped. All right, so we talked about QQQs. Let's go to the leaders. Sorry about that. Hopefully we get some people coming in, but AEHR, let me minimize this so I don't make the same mistake. Okay, semiconductors, AEHR, this is a stock that had a very, very large base here, all the way back. Here, let me bring this over. From 27 down to $7, $6.71, and then coming up the right side of the base. Lots of power and lots of volume coming off the lows, which has made this a stock that I've kept on a watch list. But very wide and loose action, which as a low risk trader, it's been hard to find like tighter entry points. So I haven't actually traded this, but it's been on the potential market leaderboard for a while. Most recently made new highs up into $28. That was the high. And then just immediately reversed, breaking under the 8-day, breaking under 25, which was a number that it was respecting, and under the 21 EMA. Had a day where it got going again yesterday, broke through, what was the high? 26.73, and then closed right at the low, closing range of 1%. Very weak there, under the 8 and 21 EMAs. And then we saw further selling today, down 5.8%, coming into this 50-day moving average. And if we get some tighter price action here or just respect for the 50-day moving average, then we could potentially trade it. But wide and loose action on a name that tends to have wide and loose action, I just haven't traded it yet. Some other semiconductors that are causing me a little bit of a worry is ON. This also made a recent high, then came back down 5.6% today, closing right on that 50-day moving average. Another stock that's just kind of wide and loose, doesn't trade very well. The personality doesn't fit my swing trading style. So although the relative strength line has been in an uptrend and we've made new price highs and fundamentals are there, I haven't found a way to trade this consistently. So not super excited about that. GFS, this is another stock, another semiconductor stock, undercut $60, and then nice oops reversal on this day. That was a potential entry point, pulling back into the previous resistance area right around $60, and then getting through the 8 and 21 EMAs makes a new high for this rally cycle, and then immediately squats. So basically flat today, not terrible. The other semiconductor stock on this list is PI, and this one is acting pretty well actually. Above the 8 and 21 EMAs, closed only down 0.2% today. Nothing very worrisome there. The group that really stood out today was solar stock. So everyone's looking at ARRY. This was a beautiful VCP entry. So big cup, and then tighter handle. Breaking over, what was it, $22 was your potential entry point. I didn't take any trades early on in the day just with the FOMC meeting. Just wanted to come in neutral to the day and kind of leave neutral. Because we've seen so many days where Federal Reserve talks about their interest rate hikes and speaks, and the market goes one way, and then the next day we see a reversal from that point. So I'm kind of looking at tomorrow more than what the price action was today. But not for solar, ARRY up 8.3%, beautiful blue line, a relative strength new high, tons of volume, nice closing range, doing all the good things. I would love to see a breakout actually work where it breaks over the previous highs and just takes off without checking back. I was hoping that end phase would do that when it broke the 325 area. This is another potential leader. But you saw it broke to the upside, then immediately pulled back, shook out the 21 EMA, tightened up again. And then this is You never want to be buying the break into 52-week highs during a bear market. Yes, maybe one or two of them will work, but for a majority of the time, that initial break into 52-week highs is a liquidity event, and people use that liquidity to dump into, and you see a check back before the actual move comes out. So look for a break into new highs. You want to keep track of those stocks, but then wait for a pullback, bounce, and then tighten up like it did here. And then First Solar was up 2% as well today. Higher highs, higher lows, closed at 160 after bouncing right around 150. The low is 148.56. So still above the 50-day moving average. It did sell off pretty sharply, but it did so on below average volume for every day except for the 6th. With this move, I kind of expect another pullback and more tighter action in a couple weeks here. But solar stocks acting well. Semiconductor stocks, not so great, at least on the leaderboard. The other potential leaders, Celsius, big cup, basically another cup, and then working on its handle. You see a couple times where this flashes above 120, but then squats below. I wouldn't mind kind of like a pullback into the 21 EMA and giving us a better entry point where it's not right at 52-week highs. CPRX, this is a biotech stock that I've traded a couple times this year. Would have been a beautiful entry point on let's see, it's Wednesday, so on Monday. This I put on the breakout watch list. I just didn't want to put any exposure on before the CPI numbers on Tuesday or the FOMC meeting today. But nice to see a couple of strong closes and then a little reversal today. Not the end of the world. That's CPRX. And that brings me to the other thing I want to talk about is biotech stocks. Every day I run this screen called Relative Strength New Highs on MarketSmith, and it basically just brings in stocks above $7 who have relative strength new highs and have enough volume to actually trade. And of the 10,000 stocks in the market, 70 of them made relative strength new highs today. And of those 70, 15 of them came from the biotech group, which is what CPRX is. So when we're looking for themes to focus on, I love to just sort the relative strength new high list or 52-week high list by the industry group. And those are the stocks that are soaking up the money and the stocks that we want to be focusing on. So clear group leadership out of biotech. I did start just a 10% position in LABU today, just to, this is a 3-time leveraged ETF for biotechs, just to get some exposure in the market, dip my toe in the strongest group. All right, so that's the first biotech stock. The other one, RYTM. This one rocketed higher on Monday, up 19.5%. Then starting to see some friction right at this $30 area. That's fine, don't want to chase here, but doing the right things. What are the other outliers? EXTR, computer networking, 5th strongest group out of 197, bounced at the 21 EMA, rallied up to new highs, or right by new highs, and then pulled back. Let's see some tighter action on here before we try and trade it. SMCI, this is one that I'll be kind of tracking pretty closely. We have a downtrend line to work with here. So if this kind of builds out for a week or so and then takes out that downtrend line, that would be awesome. Also, we have DGII. This one's a little bit weaker. It is also in computer networking, just like EXTR, but under the 8 and 21 EMAs, coming into this 50-day simple moving average. So we'll see how this holds. If this breaks on above average volume, that's going to be a huge warning sign. Okay, so those were the potential market leaders. Let's see if we have any questions. Yes, we do. What are we looking for specifically? Patterns, or do you look for entries before such breaks? Or being in a bearish trend? Okay, so my general outlook on the market, right? It's easier to make money on the upside than the downside in a bull market for sure. In a bear market, it's still relatively tough to make money in either direction. It is easier to make it on the downside because that's the overall trend of the market. You can see with QQQ, obvious, we've been in a major downtrend, and now we're just seeing kind of really volatile action with no further price increase, which isn't usually a good sign. So I take the overall trend of the market into account for sure, But I'm always looking at the two extremes, because if I'm going to put my money to work, I either want it in the strongest stocks, buying the strongest stocks in uptrends from the strongest groups, still with tighter price action so I could keep a tight stop loss, and I'm going long those names. Or I want to see the weakest stocks from the weakest groups with deteriorating fundamentals that are in major downtrends with some tight price action, either after a bounce back or something like that into key moving averages. So I could still keep my tight risk management, tighter stop loss, and then play it to the downside. Now, the problem with playing stuff to the downside is stocks only go down 100%, and they're not going to go down 100%. Some will eventually, but you don't want to keep squeezing the last stock for the last 1%, especially when it's already extended the downside. So with going long, stocks can go up more than 100%. So there's higher upside going long than shorting. But I do both, right? But I always focus on the extremes when I'm putting my capital to work. So just one quick example of a stock that I shorted recently was IPI, Chemicals Agriculture, 166 out of 197. So weak group strength. If we're shorting, that's what we want. Stock, the trend is in a major downtrend. That's what we want. We still want to see tight price action, and we want to see price below all the key moving averages, those key moving averages in the right order, with the 200-day declining, 50-day declining, 21 and 8 declining. You saw tight price action, got basically a shake out, but what's called a shake up when you're shorting, to the 21 EMA, and then you reverse lower on above average volume. So basically everything that we're looking for on the long side, we just flip it on its head and look for the short side. So that was a stock that I shorted. And then also stocks in that group were also rolling over. MOS was a previous leader here, and then shook up the 200-day moving average, pulled back, shook up the 50, the 21, and the 8, tight price action, and then starts rolling over. And then CF, I just posted about this on Twitter. This is one that I got shaken out of a couple times trying to trade this long in here before this very wide and loose price action. And eventually that rolled down to the 200-day, had just 1 or 2 days basically right around it, and then big move down here. Now we don't want to be starting a short position while the stock's already extended to the downside. Just like we don't want to be buying stocks that are already well extended to the upside. We want to see some pullback or bounce up, consolidation, so we can get our tight risk management and then play the break to the direction that we're trading, either short or long. So long-winded response to we're looking for extremes. We want to play the extremes, but with tight risk management. And obviously, if the market direction is in your favor, there's more probability of that direction to continue. So speaking of potential stocks, we're going to start with the long side. I've got a couple on the short side as well, but keep the comments coming in. If you have chart requests, trading questions, drop them in the comments and we'll get to as many as we can. We still have about 35 more minutes. All right, so first ARHS. This is one that I've been tracking for a while. It does not have the group strength, so retail home furnishing, 151 out of 197. Right off the bat, if it doesn't have the group strength, I'm lowering my position size from like a max size might be like 30%, and it won't reach that without the group strength. But this is one that I have been tracking after this gap up. It trades pretty light, 440,000 shares, and it's a $10 stock. So if liquidity is an issue for you, you're just passing on this one. But we're above all the key moving averages. We got the 8, the 21, 50, and 200-day all in the right order. All of those are in uptrends. Fundamentals are improving and starting to accelerate the last 3 quarters, which is positive. Within the group, again, it's a weak group of 19 stocks, but this stock just dominates. Ranked number 1, earnings per share, relative strength, 4th accumulation distribution, number 1 overall. With this, we kind of shook out 10 on that lower than expected CPI print, but was actually up 1.3% today while the S&P 500 was down, while the NASDAQ was down a little bit. Retail home furnishing, not a tech group, so not as correlated with the NASDAQ. With this, either just a break above the high today, 10.04, or $10 is a potential entry point. I would love for a couple more days where price tightens up, or even we get like a shakeout. Say the market does continue to roll over. One thing that I want to point out is a lot of these stocks that we're going to be talking about on the long side are exhibiting relative strength, but relative strength alone doesn't mean we want to put the position on in the market. We want to note the stocks making relative strength, and then when the market breadth improves and the market actually finds its footing, that's when we want to put capital to work and actually put some trades on, see if we get traction, and then only build up exposure if we do get traction. In a bear market like we've been in, my first quarter of 2022, right? Yeah, this year, 2022, I was focusing on the stocks that were showing relative strength. What's the one stock that's like basically flat while the indexes are down 3%? Okay, I'm gonna buy that stock today. And eventually that stock would break down because everything was breaking down in the market. So after maybe like 3 or 4 times doing that this year, I learned my lesson, and we wanna note relative strength, but only put on the exposure in the market as the market and like QQQ, SPY, and other market breadth, whatever indicator you look for, is starting to improve. Because as low risk traders like myself, we want to put on the trade, and we want to, as quickly as possible, take the risk out of the trade. Whether that be selling a portion into strength to nail down some profit, or moving our stop loss to break even. The quicker we can do those two things, the less risk that we're going to have in the market. The less risk we have in the market, the smaller our drawdowns in the account, the easier it is to survive the bear market, and the better it is to make money. So with that in mind, if we only want to put on exposure when we can immediately take out risk, we want the stock breaking out as we're putting on the trade to get that wind at our sail, all that good stuff. So with ARHS, couple more days tightening up, allowing that 21 EMA to catch up would be beautiful, but a stock that I want to keep some alerts on. ACS, this is a stock that I've traded a couple times this year as well. It's in oil and gas shipping, so it's not an oil and gas specific stock, but oil and gas shipping, which has been just a monster group in 2022. You have stocks like INSW, and one thing that I wanted to point out is this group kind of is split right now, where some of them are looking to set up, some of them are looking to break down. So while the group strength right now is 15th, I'm treating it as it's kind of like just a mediocre group, because we are seeing stocks like INSW, which had been the leader in the group, under the 50-day moving average and rolling over. DHT also kind of came back to the 50-day, bounced, but doesn't look super strong. But then we have stocks like STNG, which hit 52-week highs today. And that's why I still want to have ASC on a watch list. We did shake out the 21 EMA, nothing close to the 50-day, and then pulled back a little bit today. So we'll see how it works, but this group is starting to split. A little bit of caution, especially with XLE as a whole looking like a potential short here. So if energy is completely losing hope, then energy shippers, oil and gas shippers probably aren't the group to focus on. AXSM, this is a biotech stock, so that biotech theme that I mentioned earlier before I got cut off is something that we want to focus on. I did take this trade on the second here, where we had an HVC high volume close on the 28th, where the stock was up 31.5% on 612% the average daily volume. We came into $70, undercut it on the 30th, and then we held it on a down day in the market on the 1st, and then that was kind of my trigger. So if the stock pulled into 70, I was going to start a position and then put my stop loss just slightly below 70. So define the risk. We still stack the probability in our favor because this is a stock in a strong group, breaking out on overwhelming volume, just pulling back on lighter than average volume the previous day before I put on the trade. Respect for a round number the previous day before I put on the trade, showing that there is a bid on the stock, and then very tight risk still. So this was a stock that it worked right away. I sold everything into strength on this day because a couple different reasons. One, my dog was getting surgery. I didn't want to have any exposure on because emotionally I didn't want to have any attachment to the market at that point. But since then, it's been acting really well, coming back into the 8-day and bouncing at the low of the day there. So we'll see if this tightens up, but it's definitely a name in the right group that we want to focus on. CEG, another stock that I've traded a couple times this year, topped just below $100, pulled back through the 8 and 21 EMAs. This is the third time that it's been around the 50-day moving average since the initial earnings gap up. Every time after a quick undercut, it has found buying support there. So we'll see if it does the same here. I'm looking to take this on strength, not weakness. It did undercut 90 today, which isn't ideal, but if we take it with a break over today's high, we'd also be over the 8-day and the 21 EMAs as well. So something that obviously we want to be over all the moving averages, less overhead supply. CIEN, telecom, fiber optics. This used to be a top 10 group, so this has kind of pulled back a little bit, 42nd out of 197 now. Another stock that had a high volume close. This was up nearly 20% on 485% the average daily volume. Nice closing range, 75th percentile there. We pull back into 50. We hold it a couple different times, undercut it on the 12th, but basically holding that $50 area and the 200-day moving average. Even on a down day in the market today, up 0.3%, even though it did squat. So if the market is weak to start, I want to see $50 hold, similar to the AXSM trade. We'll see if we could get the same thing there where the market pulls in, this comes into 50, I can get my stop loss just slightly under the 200-day moving average. Right now that is at 49.50, so we're talking about a 1%, 1.5% stop, tight price action or tight risk on the trade, and then hopefully it zips out there. That's CIEN. CRDO, this was on the breakout watch list coming into the week. Shook out to the 21 EMA on Monday. Wasn't the worst thing in the world. Nice action yesterday, nice action today. Higher highs, higher lows. This is another one where it could use a couple more days to tighten up, and then especially if it tightens up under 15, that would be perfect, and then we could use $15 as the buy point. Otherwise, let's see how this handled like the last on a 15-minute chart. Yeah, a lot of friction at 15, so until there's a clean break and trending either above or below 15, that area doesn't mean much. But CRDO, Crocs, this is one that I've been watching for a while. Lots of overhead supply on the left side of the chart, but it has kind of spent its time basing out, putting in higher lows, higher highs, and then getting over the 200-day moving average. Now we're above the 200-day, which is now rising, above the 50-day, which is rising, and then right at the 8 and 21 EMAs. Both of those are just starting to curl up as well, which is nice. Inside candle today, up 1.3% while the indexes were down. Awesome sign. And has already kind of messed around with this 100 level. So similar to 52-week highs, like nice round numbers like 100. On the upside, especially if we look like how we were respecting it and then eventually broke over it, I don't want to be buying right at that level the first time it goes through. I want to wait and kind of chop around that area, make it not as psychologically strong. And then from there, we pull back in the 21 EMA, tighten up. Now, after we've already messed with that level a couple times, it's not as important. So looking for a break over yesterday's high, 99.31, as a potential entry point there. It's also in the right group, apparel shoes, 8th strongest group out of 197. Earnings are improving, but at a decelerating rate. Sales are accelerating, after-tax profit margins improving, and other group of 10 stocks, it just dominates the group. So that's Crocs. FLNC, this one had a nice move on earnings, up 26% on 518% the average daily volume, nice closing range. Compared to the indexes, remember the indexes were in the bottom quarter of their daily range yesterday. This was in 62nd percentile, so basically the upper third. And then very tight price action today, still on above average volume, up 1.7%. So a couple areas to watch is the close from the high volume day. The close was 21.73. The low today was 21.45. So we did undercut the low of that. If we hold 21.73 on a down day in the market tomorrow, that would be a great sign. And then we would just use yesterday's high as a potential entry point, or today's high as a potential entry point. But this is definitely one in that energy alternative group, same with CEG, that I am starting to focus on again, because ENPH, after that shakeout, it's starting to work well. We saw ARRY breakout today. First Solar continued to bounce off that 150 area. So alternative energy starting to work a little bit better. Oil and gas, not as much. I got two more for you, and then we'll get to the questions. PCVX, another biotech stock. Huge move on above average volume, overwhelming volume, up to $45. So over 100% move in 8 weeks or less. Qualifies for the high tide flag as long as the pullback's less than 25%. And it was, I think it was like 18% on the pullback to $40. And also notice when we did have this big shakeout day, shook out to the 21 EMA and held the round number 40, which is great to see. And then you close in the 85th percentile of the range. So that was just a shakeout to find where demand was, and it was right around 40. Comes back into the 21 EMA, bounces back up above 45, and now we're tightening up above that round number, which is nice to see. And then RXDX, another biotech stock, another stock that had a monster move. I didn't take this the next day, which was a miss on my part, because the daily range, or the closing range, was so low in the daily range, only a 5th percentile. So I thought this was kind of just like a pump and then it was going to dump. But the next day we gapped over 100, pulled back in. The low of the day was 154 cents. So if I had this on my radar, that nice round 100 number, you could get your position right around there. Stop loss under the low of the day. That's still a 4% stop. And then it just zips out. From there, we're starting to pull back, tighten up, and flag out here. Could use a couple more days, but with this much power in the name, it could also just be one that just rips higher tomorrow. So biotech continues to be the theme that I want to focus on. The problem with playing individual biotech stocks is they do have that gap down risk, which no other group in the market has that severity of gap down risk. So when you're playing individual biotech stocks, I tend to do so with at most 10% position size on my account. And when I'm putting on new exposure, I look to at least take some profit on the initial day if we are breaking out. Just there's the gap down risk. We're in a bear market. I'm not trying to lose money in this market. That's my number one priority, is not to lose money. So individual biotechs, you got to lighten up a little bit, and that's why XBI is the ETF, LabU 3 times leveraged ETF. That's what I put some exposure on to today. All right, let's see. Got another question. What do I prioritize? Price action, fundamentals, relative strength line? Okay, so of indicators, like even if I never had moving averages, what's a good example? AXSM. Even if I had never had moving averages on my chart, the one thing that I would love to have is the relative strength line, because as traders, the only way we outperform the market is by owning stocks that outperform the market or shorting stocks that are weaker than the market. So if the only way to outperform the market, and as traders, we want to do that, otherwise we would just put our money in the S&P 500, stop looking at charts all day, stop going on live streams, but we don't, because we love trading and we think we can outperform the market. But the only way we can do that is by owning stocks that outperform the market. Every single stock that outperforms the market gets the relative strength line in an uptrend, because relative strength is just the stock price compared to the index over time. And it sounds super simple, but a lot of people don't look at it that way. So if I could have any indicator, it would be this blue relative strength line compared to the S&P 500. Now you can change that to be compared to the QQQs if you're looking at more of a tech stock, but just for simplicity's sake, I use the S&P 500. So every stock that I want to own on the long side has to have a relative strength line in an uptrend. Every stock that I want to short on the downside has to have a relative strength line in a downtrend. That's like number one criteria. There's volume criteria as well. Like obviously I want to trade stocks that are liquid enough where I'm not going to run into any issues. I have a smaller account, so it's not like I run into issues often, but under like 300,000 shares, I tend to stay away from. Under $5 stocks, I tend to stay away from as well. Just kind of stuff like that. But then overall, prioritize. Price is king. Volume is queen. I use volume on my chart as like a credibility standard. So if we get overwhelming volume, that's much more credible of a move than a move on lighter volume. And it doesn't mean price has to follow that direction, but it adds probability to our trades, and that's all we can ask for. So price is king, volume is right up there, and then that relative strength line. So all of that is technical analysis. Fundamentals are kind of like the cherry on top. Obviously, we add probability if we have stronger fundamentals, if we come from a stronger group, but those are secondary compared to just price, volume, and relative strength. Relative strength is just kind of like a derivative of price. So price, volume, relative strength, and then group strength. I would put fundamentals kind of last at this point. Check out rent. All right, rent. Retail internet, 71st strongest group out of 197, under $5. It has been just ripping higher. Stocks under $5, I don't trade. My trading is more based on like how are institutions building positions, and institutions don't tend to look at stocks under $5. Some can, but a majority won't. So while you can get in there and trade it, it's going to have much wider price action than I'm comfortable with, and different price action than I've studied because I've only studied stocks over $5. So it's better to specialize in your trading and in the market than to be a jack of all trades. So I tend to just avoid things that I haven't studied, if that makes sense. Provides online e-commerce. Huh. Yeah, I haven't heard of this stock before, or this company before, but all right, what else we got? AEHR, yeah, we covered this in the beginning part of the stream, but semiconductor stocks, semis are starting to roll over a bit. The group had been showing great relative strength recently, so I'm not sure if it's just a day or two pulling back just yet, but it is something we want to monitor because the last time, and this is what I did right before the stream ended, but when we had this rally in March, it was led by semiconductor stocks. ON Semiconductor, GFS, NVIDIA was rallying, AMD was rallying. What was the other? PLAB was a monster in this rally. But then semiconductor stocks not just stalled out like the index did at the 200-day moving average, but rolled over hard. So if we're seeing the leading group roll over hard before the indexes go, that's a huge warning sign and something that we want to avoid. So if semiconductors do roll over, that's kind of it for this bear market rally. But they haven't done that yet. We're just starting to keep track of stocks like AEHR that are rolling back to their 50-day, ON Semiconductor back to their 50-day. NVIDIA is over the 200-day, but did pull back today. AMD, really weak action, down 3.8%, under the 21 EMA again. So a little bit of caution with that semiconductor group now. ELF looks beautiful. That I didn't mean that to be a pun. This is a makeup company, but yeah, my girlfriend loves this product. Nice shakeout under 21 EMA on Monday, closed right at the high of the day, and then just continues to take off. So this is a stock I haven't traded this year, and looking at the chart, I feel so dumb every time I do because it's a nice and clean chart. I just haven't put any exposure on in it. All right, when do you use leverage ETFs versus regular ETFs? I almost never use like unleveraged ETFs when I'm trading, because if I'm trading, I'm doing so because I have some conviction in the move. Doesn't mean I'm right. I'm not right about 55% of the time. My win rate this year has been like around 45%. But when I'm putting exposure on the market, I want the move to happen very quickly, and I want some power behind the move. Otherwise, I just sit on the sidelines. But when you're doing technical analysis, you always want to do the TA on the underlying asset, and then you could trade the leveraged asset to squeeze a little bit more move out of it. But you can't just buy and hold leveraged ETFs, because eventually, with the volatility, they eventually go to zero. If you do the math, there's a decay with leveraged ETFs with volatility that you don't want to hold them for super extended periods of time, especially when your underlying ETF is in a downtrend or is a volatile asset itself. We want to avoid that and always do the TA on the leveraged asset, or on the underlying asset. So looking at XBI for the stock LABU that I bought today, we're pulling in. We have every moving average within 2% of price right now. The 8, the 21, the 50, the 200 day. We just shook out 80, rallied up yesterday, and got tight price action today while the rest of the indexes were down. Biotech stocks, 15 out of 70 of the stocks that hit relative strength new highs today came from the biotech group. It's an obvious focus. I could be wrong. I'll get stopped out. It's a 10% position. It's not an overwhelming position yet. I want to add to it on strength coming out here, but if it rolls back and stops me out, it's a 6% stop on a 10% position, less than about 0.5% of risk for my overall portfolio. SMCI, yeah, we talked about that a little bit earlier. I got shaken out on this day on the 8th. I should have taken some profit into strength into this $90 range, but it was also a 10% position, and I didn't want to use up a day trade in my retirement account, so I just kind of didn't do that, and then moved my stop loss to just below break even. It was a 2.5% loss there. Now it looks great, back through 90. Can we tighten up a little bit from here? Hopefully we see that. STLD. Yeah, steel stocks look like they're a little extended in the short term. We also saw NUE kind of get ahead of itself, flatten out, and then roll back to the 21 EMA. What did RS do? Yeah, kind of uppercut the new highs and then pulled back. Now we're under the 21 EMA. So a little, STLD is the strongest of that group. So it's definitely where I want to keep a focus. But it feels like the group kind of wants to pull back, and pulling back to the 21 EMA would be perfectly fine because that's well above 100 now on this. So I want to be a little bit more patient and let that pullback occur if it occurs. Again, I'm not commanding stocks. I don't know what a stock is going to do for sure, but we have to think in probabilities and prioritize risk management. FNA, medical product IPO. Average volume's a little light for my liking. It seems like it trades relatively structured even with that. Yeah, I haven't heard of this stock before. It provides forefoot, midfoot, and hindfoot plates and screws. So I'll look into this a little bit more. I do like the price action, more recently. This is tighter price action than the left side of the chart. We don't have a respect for a round number just yet, $20. So on the upside or downside, just shows that there's not a consistent bid on the stock just yet. 2050. Let me see how this trades on a 15-minute chart. Or sometimes I like to go to the 1-minute chart just to see how illiquid it is. And it's probably going to be a little light for me to actually trade. But this type of chart structure is what I'm looking for. So Paragon 28, interesting. INST. So this guy's the IPO guy, awesome. Yeah, a little bit light as well, but not the worst. This one has the fundamentals, but is in the second weakest group in the market. So I'd be, again, hesitant. Two things making me hesitant trading this is lower than 300,000 shares, also just a $26 stock, and it's in the weakest group. So at that point, I probably won't trade it. But again, the structure looks beautiful. Just in a market that's volatile to begin with, I think you'd probably get shaken out of any low risk entry point before the stock actually takes off, or there's a higher probability of that. But I like the look of it. Just don't love the group or the volume. And then LSCC, this is another semiconductor stock that I've been watching. Pulled into the 8-day and then gapped up on the CPI numbers. Hasn't closed that gap just yet. If it continues to hold that gap, that would be a great sign of strength. Definitely a stronger kind of secondary semiconductor name that we should be, at least in our world of stocks on our watch list. Strong fundamentals. That group strength, like I said, it had been working itself up recently, and now just the last couple of days pulling back. But strong stock. I haven't found a way in it because I'm not buying gap ups in a bear market, but we'll see if it can tighten up. Would you consider small or medium trading account? So I don't like talking about like how much money I'm personally trading because it shouldn't matter, but enough where I'm not getting hit with a pattern day trading rule, but not too much larger than that, where I'm not actually worried about like moving the price of any stock that I trade, but I want to get in a better habit of looking at more liquid stocks because liquid stocks don't tend to have that same fluctuation. And in a choppy market or a bear market where we're trading for singles and doubles, like smaller, our average win is smaller, we have to do everything we can to stack the probability on our side. And the more liquid stocks tend to trade directionally a little bit better without chop. So that's what I've been focusing on more in this market environment. Good question though. Forward. Got 7 more minutes. So forward under a declining 200-day moving average. We've seen 3 rejections at that area right now. I say, why fight the 200-day? Let's get over it, have forward prove itself, and then it can tighten up and trade from there. Earnings down 41%. Okay. That didn't move the price of the stock, so I'm not too concerned about that. But auto manufacturers, 175 out of 197, partially because Tesla is so weak. Just not the strongest stock or tightening up the best. And in a market of 10,000 stocks, we can be very, very selective. So I would rather trade a stock above all the key moving averages with those moving averages in the right order and still with some tight price action so we can limit our risk. All right, let's see. A couple of stocks for potential shorts. AMZN, Amazon. This is one that structurally looked very similar to Tesla before it got going to the downside. So it came into $100, found support there once, twice. So now that we have support, when we break below that, that support becomes potential resistance. We extended the downside. Again, we're not shorting stocks already well extended from their 8 or 21 EMAs, just like we're not buying stocks already extended to the upside of those key moving averages. But we do get a bounce back into 100. And just like we're looking for some shakeouts before tight price action and then expansion to the upside on a stock that we want to buy, we get a shake up through 100, nice psychological level, the 21 EMA, which is a key moving average, and the previous high in this area on the 15th. So that's a beautiful day to kind of shake out the shorts with their stop losses. And then you see we reverse lower. We do close positive on the day, but we close in the 25th percentile of the daily range. So losing 100 could have been a potential short entry there. I didn't take that, let it kind of extend to the downside. Similar action when it rallies up to 97. Just uppercuts the 21 EMA by a couple cents here and then reverses lower. And I did kind of short this while it was slightly extended. I shorted it on, what day was this? On the 6th? 6th? 5th. On the 5th as it broke through this uptrend line and then covered it the next day because Day after that, my dog was getting surgery, didn't want any exposure on there. So that was a nice quick short. Now it rallies up to that uptrend line, uppercuts it by a couple cents, and then rejects lower, closes under the 21 EMA yesterday, fails right at the 21 EMA today, the high of the day. Now we're looking for a break under the low today as a potential short if that market is going to roll over itself. Tesla, we'll just go through the structure really quick. Similar structure, 200 instead of 100. Support, 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 rallies up, comes in, undercuts it, but then rallies up, shakes out to the upside, that 21 EMA. This was an FOMC meeting, so lots of volatility there. The first move that day in the market was green, or sorry, down here. No, it was this day. Sorry. Confusing my days. I'm almost positive the first was an FOMC meeting day. But you can tell me if I'm wrong in the comments. Shakes out the 21 EMA, closes right near the low of the day, rolls over, clean cut through 200. So now that we're under it, support becomes resistance on the downside. We rally up and look at this. This was the second time I shorted it. We uppercut the 8-day EMA. We uppercut $200 by 82 cents, shaking out the short stop losses at the psychological round number of 200, and then fail. Next time we rally up, we don't even get to 200, weak, rollover, fail. And now we're picking up volume as it accelerates to the downside. Maybe a capitulation move, but either way, I don't want to be starting my short here, already extended. I also don't want to be going long because this has the ability to just actually kind of have a crash at this point. So no trade from me there, but that kind of structuring Amazon and Tesla together, we could get a trade plan together. A couple other chart requests before we get going. HOG, Pip, sit down. This is one that has made my watch list a couple times this year, but not super strong. Doesn't tend to like this move from 40 to 45. That's an 11% move, and it's not super strong. It's just a lower beta stock that I don't tend to trade. Nice little handle here, but again, it's leisure products, 79 out of 197. Fundamentals are there, but I don't know. I don't like trading lower beta stocks, but ENPH, this is one we've covered earlier, had that breakout and then failure, but after the breakout, shakeout, price tightening up, we saw good action yesterday and today. The solar group is working. SHLS is kind of like a secondary solar name that was up again, 6% today. Had a secondary offering, that's why it gapped down here. Found support at the 50-day, all good things. First Solar continues to bounce, and ARRY looks like it wants to be the next monster in the group with today's 8.3% move over $22 there. Biotech is where the strength is. I agree. Biotech, solar, medical products, and then I do, really quick, last minute here, want to cover XLE as a potential short. This is just the energy ETF, so we can short the leveraged ETF to get a little bit more juice out of it with ERX, but we're doing technical analysis, want to do it on the underlying ETF. This is one that rallied up and just took out the previous highs, 93 to 94.71. From there, we fail, and let me draw some megaphoning price action here. So whenever you see volatility pick up and price action expand, it's not usually a great sign. Usually that responds to the downside, but even regardless of which direction it eventually breaks to, as low-risk traders using 3 and 5% stop losses like myself, we can't have expanding volatility, because if we have expanding volatility, then we're going to get stopped out of normal price action. Sorry, my dog's acting up. We're going to get stopped out of the trade with normal price action or expected volatility. So we need volatility to tighten up before we take the trade. Eventually it does break down, breaks under the 50-day moving average, and now we're getting kind of a rally up to the 50-day. Like we saw with Tesla, like we saw with Amazon, I want to see a shake up We have both the 50 and the 200-day, or 50 and 21 EMAs right next to each other at 87.70. In a perfect world, we can uppercut 87.70, shake out the shorts that we're already in, shake them out, and then fail on that day, and we would start our short position through the 50-day and 21 EMA. But I would probably look to short ERX just for a little bit more juice to it. All right, we are at time. Let's just do some quick ones because we did have that pause. AMN, weaker group, had its time to shine, couldn't really get going after making new highs. Volatility expanded here, and now we're under the 50-day. There's no clean entry point. Potential support at the 200-day, but is it the strongest stock in the market from a strong group that we can find a low-risk entry point in? No. So also don't want to short it. It's already kind of extended from the 8-day EMA now. So it's AMN, NSSC. Security software. I do like how this is responding. This is a thinner one too, right? Yeah, 226, $25 trade. If I trade this, I have to bring my position size down because just with a thinner stock in a volatile market, more likely that we get shaken out before a trending move. But I need to write this stock down. Thank you for bringing this up because I definitely want to set some alerts on it. I am holding a 10% position in LABU right now. I bought it at 733, so basically down 1% on the trade. Looking to add to it because biotech is one of the themes that are working very, very well. If the market's going to find its footing at all, biotech is going to kind of soak up that money, or should soak up that money in my head. So wanted to dip my toe in the market with the strongest group to test things out. Could still get stopped out, could take a loss for sure. You'll never hear me on a live stream or any of my videos saying a stock has to do this, the market has to do this, I can't be wrong. I'm going to be wrong, but I'm going to be wrong small. All right, we'll cut it there. Thank you guys so much for showing up and being patient with that stream mishap. I must have hit a random button. Hope you guys have a great rest of your week. Make sure you subscribe. And if you guys enjoyed MarketSmith, they're the sponsor of this video. Do me a favor, click the link in the description of this video. Give it a try yourself. You use this for 3 weeks for just $20. Take care.